Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Nvidia, the first $5 trillion company. As President Trump puts Blackwell at the heart of talks with China, we have the interview with Nvidia CEO Jensen Huang.
Plus, Alphabet, Microsoft and Meta all set to report results after the closing bell today. We'll drill down on what investors are looking for.
An AI startup, Character.AI, will ban kids from having conversations with chatbots on its platform. We have more on that story later this hour.
But first, we check in on these markets that are at a new record high. 5 straight days of gains on the Nasdaq 100. We're up 0.4%. It is now worth more than 33 trillion, this entire benchmark. But there's one key juggernaut, Ed, underneath that, and you're looking at it.
Yep, and that is Nvidia. Nvidia is the first company to reach $5 trillion of market value, of market capitalization. And one of the things we reflected on the gain in the shares, if we could please bring up that chart, is the idea that that value jump has happened very quickly from the $4 trillion milestone. Why is the stock higher by 4% today in the session? It's because President Trump on board Air Force One saying, we'll be speaking about Blackwell. It's a super duper chip. I think we may be talking about that with President Xi. And of course, President Trump due to meet with China's leader. That's where the focus is. But Nvidia's role in it is what's driving the market. Let's stay on Nvidia and bring in Bloomberg's Ian King, who leads our coverage of the semiconductor sector. The news is that the president has said that he will discuss Blackwell with China's President Xi. There is some explaining to do because the understanding of the market was this is Blackwell architecture for a deprecated lower power chip for China, not necessarily the leading edge. But there is actually quite a lot we don't know.
Yeah, no, absolutely right. And if you just go by what the president has said yesterday or today and what he said previously, there's a gap, right? Our understanding was they might be allowed to send part of this new chip line to China, but only a very reduced version of it. That was the understanding. That would be better than what they can do now. That will be good for revenue. But if he's referring to the whole of the Blackwell line, to effectively Nvidia's best chips, that's a massive expansion of the opportunity and would obviously explain a lot of excitement. But it's unlikely that that's the case.
What's extraordinary is the level of excitement even prior to that statement on Air Force One. The fact that Jensen Huang was outlining how much rampant demand there is for Rubin and Blackwell, even without any China demand whatsoever, Ian.
Yeah, no, you're absolutely right. And I think that would probably be the bigger driver of what's going on today if we sort of look at the Wall Street reaction. As you said, he put that number of $500 billion of sales that he's sure he's going to get for these new chips over a 5-quarter period. So it's a little bit uncertain when it will exactly hit and how it will line up with Wall Street estimates. But you've got to remember that total revenue estimates for the company over the next couple of years are in the 300 range. So 500 is a lot more than 300. So regardless of how exactly that lines up and whether that's all captured in 1 year, it's still a huge number. And really, as we saw from our TV interview with him yesterday and as we saw from his appearance at the big show here in Washington, he's saying, look, bubble, what bubble, don't worry about it.
Ian, you've covered this industry since the late 90s. And, I was reflecting at the top of the show that the jump in market cap from 4 trillion to 5 trillion is quite recent. But there were so many headlines yesterday from Jensen Huang himself. We heard from him for like an hour and a half in total. After the keynote, was there anything that was really important that jumped out that you think might have got lost in the wash of all of the news that happened?
Yeah, I mean, he's playing whack-a-mole, right? The biggest concern is that we're building ahead of the actual business case for AI. So a lot of what he said was like, hey, we're doing this, that, we're signing these deals to get rid of some of these blockages. We're bringing these new products to market to get rid of some of these perceived blockages. Oh, by the way, here's our guaranteed revenue. And guess what? I'm on a plane to Asia to try and help sort out this big problem with China. So there was a huge amount of information given, but it was all channeled in the same direction, which is AI is real, we're going to make sure it's real, and we're going to get rid of some of these problems.
Bloomberg's Ian King. We thank you so much for the roundup. And look, Ian was just talking about the flurry of partnerships that were announced yesterday. One key one of them, Nvidia planning to make a $1 billion equity investment in Nokia. The announcement saw a massive surge, look at it, in Nokia shares. We, of course, sat down with Jensen Huang and Nokia CEO Justin Hotard about the news.
For national security reasons, for economic reasons, our industry should be built on American technology, and for the very first time, we can do that. We have a brand new product line that takes advantage of computing, accelerated computing, and AI, and we have a great partner to help us do it with Nokia.
The market reaction kind of speaks for itself. There was a time when Nokia was already looking to America. You've been in the role since April, but may I start by asking you what role the administration played in bringing you both together, if this is indeed a strategic priority?
Well, I don't think there was anything specific that the administration did, other than they've created the environment to support innovation. I mean, Jensen's talked about manufacturing, but it's also about R&D and innovation and technology leadership. And if you think about where this world is going and all those incredible devices that are going to be built on Nvidia platforms, robotics, autonomous vehicles, augmented reality, virtual reality, we need a different kind of network in the future. And that's what we realized. And that's why we wanted to forge this partnership, so that we're building a network leveraging AI for AI services. And that's really the big change here.
And the technology is flowing both ways. I mean, what is it that you will be able to do with Nokia, Jensen, that you weren't able to do on your own?
Well, first of all, Nokia is in all of the world's base stations. And this AirScale platform of Nokia is in millions of base stations around the world. If our computers are not inside that base station, it doesn't help. It's no different than NVIDIA's tech computing platforms not inside a car, it doesn't help. And so the first thing is we need a partner to get us into the world's space stations. We also, remember, we're bringing AI to radio networks, AI to RAN, so that we can make wireless tech communications a lot more efficient. Second, we're bringing AI for the radio, meaning on top of these radio networks and these telecommunication network, we're going to be able to provide AI services, which is going to be able to make it easier for us to do robotics and autonomous vehicles and industrial automation and reach all of the different places around the world. That's kind of hard to do with Wi-Fi. Cellular reaches everything. And so we now have this fabric that we can deploy AI computing services on top of it. It's going to be completely revolutionary.
In your world and in your market, Huawei is an influential player, not just in Europe, I think also about the Middle East and Africa. How important is the relationship with Nvidia to be able to counter, what Huawei does in those markets?
Yeah, look, I think for us, one of the principles I've had with my team since coming in has been do what we can do that no one else can do, and that is AirScale, what we do with AnyRAN software, the software that runs on it that we're going to be putting on the NVIDIA ARC platform. That, do what we can do well and partner with the best everywhere else. And this is a clear opportunity to partner with the best. And by the way, that's where America and the Western world succeeds, because we don't necessarily have one company doing everything like Huawei. We succeed because we partner aggressively. And if you watch GTT today, it was hard to not find it obvious that you're partnering with everybody. But that's the advantage, is this partnership. So we do what we do best. We let NVIDIA do what they do best. And ultimately, our customers win. And ultimately, for America, I think America will win because there'll be more innovation faster here.
Nobody knows telecommunications better than Nokia. They've been at it for a long time. They're all over the world. And between our two partnerships, we now have wireless telecommunications, we have AI, and we have accelerated computing, all in this partnership.
Nvidia CEO Jensen Huang and Nokia CEO Justin Hotard there. Let's get more on Nvidia, this deal with Nokia. Vlad Galibov joins us. He's Senior Research Director at Omdia, where he's responsible for cloud and data center research. Under this arrangement, the technology flows both ways, but it's basically about wireless tech for use at the edge. It was a huge surprise just going on the reaction of Nokia shares. But it's Nvidia moving into yet another new segment. What's your reaction to it, please?
So it is. I think we have seen the transition towards a virtualized radio access network be a little bit slower than what we would like. With this partnership, Nokia is basically promising to rewrite its stack, update its hardware stack, update its software stack, optimize on NVIDIA software libraries and on NVIDIA hardware. So I think it's very significant.
Why does Nvidia need to make a $1 billion equity investment in Nokia and own 3% of it in order to do this?
I think that what we've seen in the past, whenever you ask a company to rewrite their software stack, it is costly. In fact, Amazon did something similar, a little bit more under the radar, when they started shipping their ARM CPU. What they did is they would enable software developers through funding to optimize their code for ARM, to migrate their code from x86 to ARM. In essence, what NVIDIA is asking Nokia to do is to optimize their code for whatever is already virtualized from x86 to ARM, but also to move from a physical RAN appliances to a virtual RAN.
What's extraordinary, Vlad, here is if you take the bigger picture, this is NVIDIA, time and time again, basically making investments for people to ensure that NVIDIA technology is integral across every industry group. If you just go through Nokia when you think of telecoms, but they did deals across Lucid, across Uber. We think about robo-taxis. You're thinking not just telecommunications, think about the future of software when we think about what they've been doing with Palantir. Vlad, is there any other wide open space for NVIDIA to get into?
I think you're absolutely right. This is NVIDIA utilizing its cash stockpile in a very smart way by entering another market. The mobile infrastructure market itself is only $35 billion. So I think Jensen understands that this is not going to be the holy grail. This is one of the many investments. I think that you see something very similar that I think will become more prominent in storage. I think that NVIDIA has a lot more room to grow in networking. I think you see it growing a lot more in consumer PC, right? Because that's one of the things it wants to do with Intel. I think you end up seeing it probably in their robot revolution in the future. They also said they want to be in cars. So I think that we can see that Jensen's strategy is just maximize your presence and specifically get your programming environment, the CUDA environment, to be ubiquitous.
Just tell us how ubiquitous it already is, Vlad, because I think so many of us make the quick assumption that it's all about hardware and semiconductors, but this is a full tech stack, and the fact that they're so ingrained in terms of software as well, it's almost become the de facto king across every other big tech company.
Yes. In fact, I myself underestimated it a little bit because, one of the things we know is a NVIDIA advantage was the NVLink. And we are starting to see more challengers in the networking domain. But the reality is the networking is not as sticky as software. Software is extremely sticky. The thing is they have made such a rich suite of tools, in essence, a programming language and so many tools that make it easier for different skill sets of programmers to develop. I think that's what's so impressive about the NVIDIA software portfolio. And the fact that you can use it for many optimized functions. I think that's what's very interesting. In essence, Jensen is asking his army of developers, I want you to help this industry and this industry and this industry and this industry. That's, I think, what's the most impressive.
Vlad, the biggest disclosure that Jensen Huang made was the $500 billion figure of revenues that they say will come from just Blackwell Rubin, specifically over 5 fiscal quarters, excluding China. When that number went up on the screen on stage, a lot of people reacted. How far ahead is that figure than the model that you had for the data center business that NVIDIA is doing?
I knew you were going to ask me this, so I did, of course. That was what we were also watching yesterday. It's about 100 billion higher. So this creates about 100 billion opportunity. I think it's very significant, particularly if we end up seeing the Blackwell deal with China, because that means that we then have more than 100 billion of upside. I think when I think about the 100 billion of upside that Jensen is showing us, I think of it as a backlog, an order pipeline. There are a few concerns that I have along the way in terms of that materializing in my forecast. So I am going to start exploring baking it in, but some of the things that I am concerned about are physical infrastructure availability and supply chain readiness and power availability in the data center. I would say that these are the three things that I am most concerned about. Is all of the components that we need there in the supply chain? Specifically, is the physical infrastructure ready for data centers? Because there's very long lead times on some physical infrastructure. And then finally, it's the power.
Vlad, can I jump in very briefly here? Because when you think about the supply chain, you think about the other components that are needed within data centers. SK Hynix says its full 2026 chip slate is sold out.
Exactly. So the thing is, with SK Hynix, they are in the Blackwell, but the ribbon is done with Samsung. So I think that there's some smart hedging of bets there from a memory perspective, but there's so many other aspects. There's packaging material. And again, NVIDIA is being very careful with how to balance the packaging material supply chain. But NVIDIA has only been able to control the semiconductor part of the supply chain. I'm worried about some fundamental materials like precious metals used in the building of the servers and the electrical equipment.
That's why rare earth metals are a key concern when we're thinking about US and China. Vlad Galibov, joy to have you on, Senior Research Director at Omdia. We thank you. Coming up, more on NVIDIA and its broader impact on the tech markets. This is Bloomberg Tech.
Nvidia has become the first $5 trillion company. This is CEO Jensen Huang's spree of deals propels the AI frenzy to new heights. Let's bring in Margi Patel for more. She's a senior portfolio manager and head of the capital allocation team at Allspring Global Investments. $629 billion in assets under advisement, about $11 billion worth of Nvidia shares in your fund, Margi. Your reaction to this company being the world's first $5 trillion market value company?
Well, it really shows us this representation of this huge sea change in technology, which is artificial intelligence. And certainly it's the leader, it's way ahead, but honestly, it's like a tsunami. There's one big wave, and then there's wave after wave after wave. And we really don't know if we're even near the peak of artificial intelligence really being incorporated in all the different industries. So this is a qualitative change that we've never seen in our investment careers.
So, Margi, just to focus in on NVIDIA at this moment, do you add to that stake that you currently have? We've still got 73 buys out there from the analyst community, only one sell, even at a $5 trillion valuation.
Yeah. Well, it's very hard to be negative on NVIDIA unless you see some negative development in the company. And just because the stock has gone up, and actually looking at my portfolio, I actually have some stocks that have actually outperformed NVIDIA this year, gone up even more. So I would say that as long as the growth path looks pretty good for NVIDIA, that it would be a worthwhile add.
I mean, look at Micron, for example, up 150% so far this year. Some of the ulteriors that have really managed to be swept up in what's needed in data centers and compute more broadly. Where hasn't the market seen enough value yet?
Well, I think really all the oxygen is being sucked out of other areas of the market and going into artificial intelligence, data storage, data centers, all the rest of that. And I think we're still continuing on that trail. All those companies have high cash flow to fund these activities. There's no sign that they're losing their enthusiasm to make investments to keep a leading edge in NVIDIA. And really, if you look at some of those stocks, like Micron's a great example, if the worst thing you can say about it is the price has gone up a lot, that doesn't mean you ought to sell it here. So I think we're still somewhere in the middle of this huge wave of changing the whole economy, changing technology, and it's really too soon to say stocks are too high, I'm going to bail out.
On that note, Margi, I spoke to Jensen Huang yesterday afternoon, and I had to ask about his view on a market bubble. Let's listen to what he said.
I don't believe we're in an AI bubble. And the reason for that is we're going through a natural transition from an old computing model based on general purpose computing to accelerated computing. We also know that AI has now become good enough because of reasoning capability, research capabilities, its ability to think. It's now generating tokens and now generating intelligence that's worth paying for.
Jensen's argument is the same it has been for the last 2 years. We're in the early innings of a shift from general purpose computing to accelerated computing. But the different bit now is he's saying AI is worth paying for. I think that he's saying there's real revenues on the software side. Is that the evidence here? Is that the argument?
Well, I think it's really not so much we haven't actually seen revenue pour in, but I think it's a change that companies are making because they see that this is what they need for their future. And I think it's totally different, as he was making the point, from, say, the internet bubble that people often make a comparison with. The internet bubble was about deregulation of the telecom industry, and it was about moving data and voice faster through pipes. It wasn't a material change. This is artificial intelligence. All the new chips and so forth are really a fundamental change in how we perform all kinds of tasks related in our economy. So, and I think because it's happened so fast, it's really only been, say, 1 year, 2 years. It's hard to adjust to say we're looking on the verge of a whole new world in how we approach technology. So I think that's why people are a little discombobulated seeing how fast these stocks have taken off. But they all have the cash flow to finance this growth. So it isn't as if they're artificially borrowing money to make investments that look pie in the sky.
Margie.
This looks the beginning of something. Yes.
Margie, you mentioned cash flows. What's your position on the circular financing concern about Nvidia?
Well, I think those partnerships where they've made equity acquisitions in some of these companies is just a business partnership. It seems perfectly reasonable when they're striking up a deal between two companies. And again, coming back to the companies like Nvidia, they aren't borrowing money to finance this activity. They really have enormous cash flow that they're using and deciding how to best allocate that. So I think that companies, particularly the large companies, have an idea of where they can best get the long-term returns on their cash flow, and that's what we're seeing.
Margie Patel of Allspring, thank you so much for joining us today on All Things AI. Time now for Talking Tech, and first up, Amazon is planning to invest another $5 billion in data centers in South Korea. That's on top of the more than $4 billion that it committed with partner SK Group back in June. Now, the new funding will support the build-out of AI infrastructure to 2031. Plus, GoTo Group, well, it's raised its full-year forecast, citing new initiatives and cost cuts. Indonesia's largest internet company posted its fifth straight positive quarterly result and has been steadily narrowing losses since its 2022 IPO. Still, investors remain cautious. The stock has fallen about 20% over the last 12 months. And Apple, well, it's preparing major refreshes to its MacBook Air, iPad Mini, and iPad Air lineup, with plans to give the devices higher-end OLED displays. Now, that's according to sources. The iPad Mini will likely be the first to gain the upgrade, arriving as soon as next year.
Welcome back to Bloomberg Tech. There is a lot to get through in the earnings context. Let's throw up the board and let's go through it one by one. Fiserv is a name that we have not used as much on this program, but the stock is down 42%, at one point down 47% in the session, absolutely slashing its EPS guidance. Left one analyst at Jefferies saying that the level of this miss in the quarter gone and the cut to its outlook is difficult to comprehend. That's a payments processing name. Very interesting. Going also to telecommunications, Verizon, another one that we're watching, up almost 3 percentage points. The US largest mobile service provider, of course, actually had a loss in wireless phone subscribers in 3Q, but new CEO has this aggressive growth plan that we're looking at. Then there's Etsy. So this is kind of interesting. There's the earnings story, Caro, and then there's the change of the top. And you spoke with the company about that CEO change. Tell me more.
Yeah, and it's actually a trusted veteran of Etsy that's coming to the fore, who's been at the business since 2011 and ran Depop, a company that they bought a few years ago. And we're talking really here about Kruti Patel Goyal being brought up from Chief Growth Officer to be CEO as of January the 1st. Josh Silverman, I chatted to him yesterday, and really, here's a man who's been at the helm for 8 years. He steered this company through the lockdown crisis, through supply chain crises, and now he's positioning this business for artificial intelligence. Remember, they did the deal deal with OpenAI already, and he thinks Etsy is uniquely positioned to win in AI, but he really thinks that more clearly, Kruti Patel Goyal is the person to steer it, with her really having done every single job, he says, over at Etsy, apart from head of engineering. And he really thinks the amount of artificial intelligence and personalization she brought to Depop is going to be the winning formula. It feels as though there's some nervousness out there from the investor community right now, whether it's about the CEO or whether about, of course, maybe about the forward-looking guidance from some of its earnings. But let's talk about earnings more broadly right now, because after the bell, we've got, Alphabet, Microsoft, and Meta all set to report results. Let's take a look at what investors can expect and start with Meta. Bloomberg tech reporter Riley Griffin joins us now. For Meta, we know the capital expenditure has been there. We know the focus has been on hiring and talent. What really Zuck has to prove out is that it's really winning formula for advertising sales.
No doubt. And we will be watching that capital expenditure number quite closely. So Meta has guided that it expects to spend as much as $72 billion this year on CapEx. A lot of that going to AI, infrastructure, data centers, talent. Any revisions to that number will certainly interest Wall Street. We'll also be looking, as you said, at the core advertising business. So analysts want to see about $50 billion this quarter coming in, and they're forecasting about $57 billion for the next. Whether there is any weakness in those numbers will give pause to investors who are concerned that they're not going to see that return on investment from AI. So if we see beats there, it will be a good day for Meta.
Just really quick, Riley, we're also now thinking about Meta's debt pile and its borrowing to fund these projects. What do you know?
Well, in a lot of ways, Meta has been able to keep debt off its balance sheet. Think about the really notable deal with Blue Owl to finance construction at what's going to be Meta's biggest data center in Richland Parish, Louisiana. So they are taking really creative approaches to ensure that that debt isn't showing up on today's quarterly report.
Bloomberg's Riley Griffin, thank you very much. Let's stay with earnings. This time, Alphabet. Bloomberg big tech reporter Davey Alba here with the latest. And actually, with Alphabet, really consistent spending, Davey, but also cloud. And like GCP in recent weeks has been really interesting. What do we need to look for?
Yeah, absolutely, Ed. I think CapEx and cloud are the key units to watch out for. Last quarter, we saw that Alphabet changed its guidance to $85 billion for spending on AI infrastructure for 2025, which was a $10 billion increase over its last guidance. So, Google is really showing its commitment to AI here. And then cloud has been booming. We've reported recently on the huge high-profile deal with Anthropic for cloud to provide its specialized AI chips to the AI startup Anthropic, and this was a deal valued in the tens of billions of dollars. So that is a unit that we will be certainly watching very closely. We also know that cloud has existing commitments from AI startups that it knows will boost revenue for its unit up to $58 billion by 2027.
Yeah, I think Wall Street analysts are anticipating, about a 30% growth for the cloud computing part of the business. But in terms of scale, Davey, just remind us, what is it? About 85% of revenue still comes from advertising. That's still going to be where the real driver of revenue is going forward. Is there any worry about, competitive threat, particularly when it comes to search?
Yeah, absolutely. Search is still the core financial engine of Alphabet. That has long been the case. And it's, being pressured to prove that it can still be a driver of growth, even as AI rivals circle, particularly OpenAI with its AI-powered search tools and new web browser that it's launching. This unit is certainly under pressure right now.
Yeah, all eyes on Atlas. Bloomberg's Davey Alba, thank you, as we head towards the closing bell and that set of numbers. And rounding out the big earnings is, of course, going to be Microsoft, the tech giant, hot off the heels of that relationship reset we've seen with OpenAI. Let's bring in Michael Turin, who's Managing Director and Senior Technology Analyst over at Wells Fargo Securities. Interestingly, Microsoft trading down a bit today, but yesterday really got a lift past $4 trillion market capitalization because we thought that clarity is there in terms of relationship with OpenAI. What clarity do you want from the numbers tonight?
Well, the tech investing market is going to be focused on Microsoft's CapEx. We're $1 billion above street at $31 billion and expecting more than $125 billion this fiscal year from Microsoft. Microsoft investors are clearly focused on two things. It's Azure growth. Can the reacceleration continue? We've seen really strong net new Azure revenue trends over the past couple of quarters from the company, as well as what you're alluding to, the OpenAI relationship. We called it a sigh of relief yesterday, just that announcement is out, and we're seeing, you saw the stock react well yesterday, just some signs that the companies are working more closely together still after, I think, a lot of back and forth around what's happening between the two companies right now.
Michael, based on your model for Microsoft, like has this unknown about the relationship with OpenAI really been an overhang on the stock?
I think, I think it's the first time in a long time we've started to field questions on cloud market share. Azure has been the dominant market share gainer since ChatGPT took the world by storm. We've seen Azure just continue to outpace growth of the other hyperscalers. We're talking about a business that's approaching $100 billion of annual revenue, growing near 40%. Right. These are unprecedented rates. But, with some of the deals that we've seen announced away from Microsoft starting to show up, there have been questions around just the size and scale of the aspirations of OpenAI and how much of that accrues to Microsoft versus the broader cloud hyperscaler ecosystem. So, we think so this the fact that
this is the conversation. Let's do this. So GCP has a 1 million TPU deal with Anthropic. Microsoft has started having a relationship with Anthropic. AWS and Bedrock is kind of thinking, well, what else can we offer? Grok is now available on Azure, I think. Basically, the landscape's changed. Does the hierarchy change now? AWS, Azure, GCP?
I mean, we think Microsoft still has the lead in terms of market perception. That relationship with OpenAI has been very advantageous. So we think Microsoft share gains have been primarily a function of two reasons. Number one, just the later stage movers to cloud are disproportionately more skewed towards Microsoft and more traditional businesses, whereas Amazon won the early adopters, Microsoft seeing the next wave come to cloud. And then the relationship with OpenAI has really improved the perception of innovation within Azure and created an environment where startups are building using Azure really for the first time. And I think everyone wants access to OpenAI's technology, which is embedded into Copilot. You can directly tap the OpenAI API through Azure. That's an exclusive agreement. Those things are holding firm, so we're still very confident in Microsoft's position, but the world has changed. What we underestimated was just how big the size of just the training market would be within the AI cloud market. So we're just seeing growth that we haven't seen in technology in quite a long time.
And to be fair, maybe Microsoft did too. The issue for them is supply, not demand. They're having to turn to other companies that you analyze, CoreWeave. They're looking at Nebius and Nscale to really be able to fulfill some of its overall cloud needs. How are you thinking about capital expenditure rising for Microsoft in the next full year 26?
I mean, we think it continues to go higher. We're modeling above consensus right now. We're $1 billion above consensus for this quarter. We updated that just based on some of what you're saying. We hear the capacity constraints in the market. We hear data center capacity still coming online. We think the most important thing beyond what Azure presents for the quarter is where they guide. The December quarter should have a little bit less capacity constraints. So I think investors will be listening carefully to see how they characterize Azure growth for December as well. But you're right, this is a good problem to have for Microsoft in many ways. We have a business that we're saying is $100 billion in scale and can't even keep up with demand right now. Just unprecedented levels of interest.
What about, though, the productivity tools? How much of a lock-in does it have because of the software?
We can't get away from it. I think it's been the toughest moat to crack in software. Right? We've seen many companies try, and the honest truth is we've just all been conditioned to work in Microsoft and very effectively. Copilot is a way to extend. I think the productivity use case that is pretty interesting from the numbers perspective, investors are focused in on Microsoft 365 Commercial Cloud, which does embed the Copilot metrics as well. That business is forecast to grow 13 to 14% this quarter. Any upside would likely be attributed to Copilot and could create, I think, the next big unlock for Microsoft. The productivity business could start to show growth improvement alongside Azure.
Michael Turin, software analyst of equity research at Wells Fargo. Thank you so much. AI startup Character.AI will ban kids from having conversations with chatbots on its platform. This follows growing pressure from lawmakers and a raft of lawsuits alleging the company's so-called characters are responsible for harms to children. Bloomberg's AI reporter Rachel Metz has the story. You know, Character for some time has been a very interesting startup and platform to follow. I think we've even talked about some of the risks around the concept of an AI avatar. But this is a very specific line of reporting. I think best just to summarize it for us.
Yeah, I mean, Character.AI, when it got its start a few years ago, the idea was that anybody could create or use any kind of chatbot. I mean, they wanted people to make anything really. So you'd see like video game character style chatbots like Mario. You'd see impersonations of celebrities like Elon Musk, so on and so forth, all different kinds of things. It was kind of, I mean, it's part of a wild west of the scene of AI chatbots that we're really in right now. But what you also saw is immediately this was very appealing to teenagers in particular. Like a huge portion of their users have always skewed younger. And over time, we've seen a number of lawsuits being filed in general against companies that are offering AI chatbots, alleging certain types of harms to users. But in particular, a bunch of them have been filed by parents against Character.AI due to harms that they allege have happened to their teenagers, up to and including suicide.
And then the regulators have become involved. FTC opens a regulatory investigation into all makers of these sorts of AI chatbots as to how much children should be continuing conversations with them. We've got others, state of California, trying to regulate it, Rachel. So are they front-running this in some way, and how do they execute the limitation on age here?
Yeah, I mean, I think this is a really interesting strategy. Just yesterday, we saw a bill introduced in the Senate that seeks to outlaw the use of AI chatbots by people who are under 18. And in that's, you know, like right in that same time frame, we're seeing Character.AI saying, hey, actually, that's basically what we're doing here. I mean, they're going to let their kid users who are roughly between the ages of 13 and 17 use different features, but they will not be able to have these endless back and forth chats with their so-called characters. That's what they call their chatbots. And I think, yeah, it is in many ways an effort to get ahead of some of the issues. But the company also told me, look, we think we don't know, there's still a lot we don't know about how these chatbots can impact kids. And so we think that this is the best thing to do right now.
Rachel Metz, it's a great story. We urge people to go and read it. Thank you very much indeed. Look, let's stay in the world of AI startups, because one of the biggest backers in the industry is also one of its biggest winners. Nvidia has been growing the number of startup investments it makes each and every year. Bloomberg's AI editor, Seth Igerman, is here to talk us through it, because it's not a venture capital company, but its strategic part, the VC arm of it, is just becoming a juggernaut in the space.
Yeah, it's definitely become the $5 trillion benefactor of most of the AI industry right now. What we reported here is that just through October of this year, Nvidia has backed 59 different AI startups, which already outpaces all of what it did last year. I think it's more than triple or quadruple what it did a couple of years ago. And there's no sign of it slowing down. And I think there's a clear desire here to kind of support the wider ecosystem and industry in ways that probably come back and benefit Nvidia.
One of the things we mentioned in the story is circular financing, or the circular nature of what's happening in the AI ecosystem. What would Nvidia say about that?
You know, what they've said to us and to other outlets certainly is that there is no obligation here that the companies that it provides money to have to then turn around and buy Nvidia chips. And that may be true. What's also true is that obviously Nvidia is the market leader for AI chips. So if it helps prop up dozens or hundreds of AI startups with capital, some of that money is going to come back to Nvidia. And ultimately, that feels part of a larger strategy. As we all know, Nvidia is very dependent on a handful of large tech firms who buy up the majority of its chips. If it can build future market leaders or even smaller firms with more capital, that's going to benefit and help diversify its revenue stream.
There's a great anecdote in the story coming from Aravind Srinivas, who's over at Perplexity, just saying how Jensen gets it done in terms of giving him access to GPUs that he needs.
Exactly. And I think it's not just about financial resources. It's about technical know-how. It's about the network. And fundamentally, it's about being able to brand yourself as an NVIDIA-backed company that carries a lot of bona fides right now.
Bloomberg's AI editor, Seth Figman, thank you very much. Now, coming up, we will stay with Nvidia as President Trump says he'll be discussing Blackwell chips with Chinese President Xi Jinping. That conversation's next. This is Bloomberg Tech.
We are going back to our top story. President Trump is set to meet with Chinese President Xi Jinping tomorrow, with discussions expected to include Nvidia's new Blackwell chips. Bloomberg senior tech editor Mike Shepard joins us now. Nvidia's just added $1/3 trillion in the last 2 trading days. Yes, there was a raft of its own announcements, but when I say new Blackwell chips, that's sort of the operative word here, new. Are they going to be allowed to sell some sort of dumbed-down version of a Blackwell architecture into China, Mike?
Well, that is the proposal that President Donald Trump has expressed willingness to entertain over the summer. He said that a deprecated version of the cutting-edge Blackwell chip would be something he would be open to allowing sales of in China. But it's unclear whether the Chinese would welcome it, and also what the reaction might be here in Washington among Republicans and Democrats who remain skeptical about the wisdom of selling such advanced technology to a geopolitical rival, Carol.
What's so extraordinary is that what we heard articulated by Jensen, and here we have President Trump talking about Blackwell being in the discussion point. Jensen went out and said, I've got $500 billion worth of orders for Rubin and the newer architecture and Blackwell put together, with 0 coming from China. So what do you think the likelihood is here that China even acquiesces, even wants to be buying any of this?
Well, it's a great question, because so far China has rejected the even dumber down chips, the H20s, that President Donald Trump had relented on allowing sales of in China earlier this year. You remember in April, the Trump administration blocked the sales of the H20, which had been designed for the China market, but then relented in August. But at that point, authorities in Beijing said no thank you and encouraged local firms instead to buy domestically. And this is part of the Chinese government's effort to build up its own supply chain domestically, to try to turn to local producers and build up their own industry. So the question is, will they even want I guess, dumbed down version of the Blackwell? Should President Donald Trump persuade Xi Jinping to accept it? Now, one of the theories has been that maybe China is holding out for a more advanced version of the AI chips that Nvidia makes in hopes of deploying them across their industry. There's no question that they outperform on a chip-per-chip basis what is in the Chinese market. But one thing that China has been able to do is produce its AI chips, including the Huawei Ascend, at scale and deploy them at scale. And that makes up perhaps for some of the deficiencies in individual chip performance that we've seen. So it'll be interesting to see how this all plays out and whether other bargaining chips may get tossed into the conversation as well, Cara.
Pardon the pun. Will we see Jensen and President Trump meet?
Well, the two men indicated yesterday that they might see each other somewhere on the sidelines of the APEC summit in South Korea. Jensen left, we're not sure exactly what time he left Washington, but by now he would be at least close to Seoul. The president's meeting with Xi Jinping is scheduled for 10 p.m. our time tonight. So we'll be watching to see if the Jensen and Donald Trump cross paths. The two men regularly meet and speak by phone, Jensen said yesterday. So surely they will be in touch. And if Blackwell is approved, we might see an even bigger reveal.
And we wish them all well with their jet lag. Bloomberg's Mike Shepard, we thank you so much. He's been all across what's happening in Washington and GTC. But that does it for this edition of Bloomberg Tech. Tell you what, we're also all across after the closing bell. Join us to help break down the earnings out of these key companies. Meta, Alphabet, Microsoft, all focus on capital expenditure, all focus on how much demand they have for Nvidia products, of course. Don't forget to check out our podcast as well. You can find it on the terminal as well as Apple and Spotify. This is Bloomberg.